Hello viewers, in this video I'll be going over the Dow Jones ETF ticker symbol DIA. After 1 hour into trading, we are currently down 12 basis points, and on the 1 hour chart I do see us going lower. Reason why: we have the MACD diverging and pointing downward and may turn negative, same as in the 4 hour MACD. It turned positive and it may begin to point down as well. On the daily MACD, we do see the same action. It's starting to diverge and we may be heading down. But as for support, I do see support that corresponds to past resistance dating back to November, December, and in February. So I do see us finding support around the price level, you could say roughly at the point of the 50-day moving average. And for resistance, it will be the all-time high of last year back in October 3rd. So if we were to move lower, our support is only about 1.6% move down, and if we were to move up, that price movement is around 1.4%. On to the next module, I'll compare today's current trend with this trend that dated back in May 8th, 2013 to August 2nd, 2013. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we have an upward channel that remained above the middle Bollinger Band. After that, we do see weakness touching the bottom Bollinger Band, and I'll make this red. And then we see a price action of reaching the middle Bollinger Band. And then afterward, we see another dip, and we see the action here twice hitting the bottom Bollinger Band. After that, we see an upward channel right here. And onto the trend in question. So what we have here in the beginning, the candles remaining above the middle Bollinger Band. And then we see a dip touching the bottom Bollinger Band. And then we see a price action touching the middle Bollinger Band. After that, another dip touching the bottom Bollinger Band. If you're not familiar with Bollinger Band, it's a tool used to measure price level and volatility. And after we break out the middle Bollinger Band, we see an uptrend. So you could say it's similar to what we see in today's current trend. So we have 1, 2, 3, 4, 5 points. 1, 2, 3, 4, 5 points. So if the trend is similar or patterns are similar, there's reason to believe the outcome will also be similar. So let's check the forecast model. I'll go day by day where the Dow Jones or DIA will head to in next coming days. 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then, in May 8th, 2013 to August 2nd, 2013, the Dow Jones was down about 1.15%, so not much, just down about 1%. And here's where I compared the lines to, and that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.